Hey traders, it's Rick here. I wanted to kind of do something a little different. Um, Instead of just shooting out trading ideas and stuff like that, I'm still going to do that, but it's going to be more to I don't want to say it, hold myself accountable to following my rules. Okay. Um, I feel that if I record my daily analysis, one it will help me, I think, by following the rules um, on a pair by pair basis. I also feel like it will give me that insight to go back and actually review my exact analysis that I did. Because a lot of times when we're doing analysis on our charts, we get cluttered and we start removing fibs, or we remove drawing tools or whatnot, to keep our charts clean so we can kind of see what it is. But marking up your charts, I feel, is a great way to really know what the market is doing. Is it an uptrend? Is it in a downtrend? Is it in consolidation? Is it making higher highs, higher lows, and that sort of thing. So, um, I I feel that this will help me personally on my journey to transition from demo trading, which I've been doing, to eventually getting to that live account once again without worrying about blowing my account. Okay. Um, One of the reasons I've really thought about doing this, and I've really taken the time to think about it this week, is because lately I've just been getting smashed in the markets. I've back tested a lot of pairs. I've back tested a lot of different strategies, and I feel that I've got a 4 pair portfolio that should provide me with a nice return in the long run. Okay, if I follow my rules that I have. Okay, um, now just because I break down the price chart and share trade ideas, whatever, do not follow my trades. Okay, there is a high likely that every time you place a trade, you will lose that money. Okay, and as I find trade ideas and trade setups that meet my rules that I've back tested, and that I have faith in that will provide me with the returns that I'm looking for. If I've got 100 pip stop loss and I place that trade, then I'm okay losing that 100 pips. If I've got a 50 pip stop loss, you know, then I'm okay with losing that. I expect every trade to be a loser, period. Because at the end of the day, we never know the outcome of any specific trade. Okay? In the event that we would know, the pound's going to rally from this point, back up to 5,500 or 155 even handle. I mean, I would bet my house. I mean, I would sell my kids, but we don't. So we have to control our risk, and we have to back test our plan and strategies, and we got to tweak them along the way. And that's kind of where I'm at. Is I'm trying to tweak it, and I'm going to show you some of my stats on myfxbook.com, and kind of give you an idea of what really got my attention. Now, I like myfxbook because it gives me an idea of how I'm doing. However, I'm not 100% sold that it's 100% legit as far as exactly the pip count to the dollar amount to the percentages and whatever. I mean, it could be, but I'm a little skeptical now, because I don't think it counts for, if you're taking 2 targets versus one, and getting stopped out on your whole position versus partial positions and all that. Um, so I want to kind of go over there now and kind of show you what I'm talking about. Uh, okay, so this is my FX book. My name on here, my user ID is MattFX. Um, I wonder why, right? When I first started, I was pissed off that I lost money. Okay, so I mean, if you look in here, my gain right now is negative 6.88%. My absolute gain is 8.18%. Okay. Not sure why they're not the same. I'm guessing one's because I've made a little bit of money and then I've given it back or whatever. I don't know. It's kind of confusing to me to understand that. My daily gain is negative 0.1%. My monthly drawdown is negative 2.8%, and my overall drawdown is 7.5%. Okay. Now I did start this account out with $5,000. My highest equity was on September 22nd at almost 5,300. So I mean, I was doing good, like right in here. We just putting along. Then I gave some back here, and I came back and I rallied up a little bit, and then we came back down here, and then boom, we rallied up. Okay. Now this move right here probably should never happen, because if I'm not mistaken, I made some mistakes and traded. I made two mistakes that I remember in this area. One was I traded the Aussie dollar that I'm not supposed to trade right now because it's not in my portfolio that I'm trading. And two, I had traded the wrong position size. However, that will never happen again. So lessons learned. I mean, the good thing is that it went in my favor. The downside is I don't have the true results right in here because of those two mistakes. Okay, I mean, that's 458 pips, on this one day. So that was probably the day I did it. I don't remember what day it was, but I mean, it was crazy because it just shot up and hit targets. Okay, now if you look down here, well, it may I thought it was Aussie dollar, but maybe it wasn't, because I only placed one trade and it was a loser. So I don't remember what mistake it was that I made in here then. I'll have to look at my notes. But anyways, looking at the pairs, like I've got Aussie CAD in here that I shouldn't have traded. I got Aussie dollar I shouldn't have traded. I got Euro Aussie I shouldn't have traded, although it was 19 pip winner. Then I got dollar yen in here I should have never traded. So I've made some mistakes, but I mean, I've taken note of it, and it won't happen again. I mean, I truly believe that if you really want to be successful as a trader, you have to be disciplined, and it takes work. We get caught up at analyzing charts and looking for opportunities or whatever, and what happens is I try to stay sharp in my analysis and what I'm looking for. So I mean, I'll break down any pair or any stock or whatever, just trying to use my technical analysis to find trading opportunities, and I'll kind of watch them play out. And I guess these were really good setups, so I thought, and I placed orders, deviate them from my plan, and we just can't do that. Because now, I mean, my overall results for what I'm looking for is skewed. Okay, but I mean, that's kind of my battle that I've been going through. Now, if you look down here, okay, I started this account in August of 2016 of this year. Okay, and I gained 3%. Okay, 3% I'm happy with. In September, which is usually a rough month, as far as my mentor goes, and everybody, historically shows September's been really bad. I think they did really well too in September, but I mean, I was up almost 2.5%. And then we come into October. Okay, I'm down almost 12%. Okay, and we're halfway through the month. Today's the 18th. So, as I'm watching this creep down and creep down and creep down, I'm thinking, Rick, what are you going to do to get out of it? You've got a plan that you've back tested. You know that if you follow the rules, you'll do okay. Why are you sitting at almost 12% drawdown? Well, I've made some mistakes. I'm lacking on my journaling, and I'm hoping that creating these videos will help with that. because I'll be able to do I'll be able to rewatch my own videos to analyze how I performed, and was it a trade I should have taken and whatnot. And I just think overall it will help me personally, and I hope that this kind of helps you too, show you that even though I've been through training and I've done a lot of charts and I've done a lot of back testing. I mean, mentally it still is a battle to follow your rules. I mean, you got to be disciplined. I mean, we hear it and hear it and hear it, and yet, I mean, I've been doing it for, oh my goodness, I don't even know. I mean, it seems like forever. I mean, I know it's been at least 2 years. Only been not quite a year since I got trained and went through the training, but I mean, it's a battle. But I mean, I personally, I really want to be a successful trader. Now, whether I'm going to go into education or if I'm going to manage money, I'm not 100% sure on. I have to get the process down first. And I'm sure if you're watching this video, you've heard the saying, process over outcome. I mean that's short and sweet right there. You know what I mean? So let's go ahead and jump over to the news and kind of see what's going on today. I know we had some CPI earlier today. We got New Zealand dollar out at 9.48. Let's see if I can refresh that. So that's come out a little short. And then we got some CNY. I don't trade those, so I don't think it's going to affect me any. So basically, the news that was coming out today has already come out. That's going to move the markets. I mean, even if this down here, the GDP, industrial production, if any, even if this was going to move the markets, I'm not going to be trading at 10 o'clock at night. So I'm not too worried about it. I will have stops in place. So I mean, if it does get volatile in the markets, I'm protected. So let's go ahead and jump on down to the pound yen. Okay, we're going to start here on the daily chart. It's obvious that we are in a downtrend. Okay, there shouldn't be any questions. We are in a downtrend. Okay, so I'm going to go ahead and fatten this up so we can see it a little better. Okay, I'm going to change the width of my bars. I don't like them that fat. Let's see. Okay, that looks better to me. Okay, so what I'm going to do is I'm going to mark up my chart and kind of get an idea of what the market's been doing lately. Okay, I know it's in a downtrend, but what has it been doing lately? Okay, so what we have is up here. We price pushes lower, correct? Okay, this is the low back here looking left, right? Okay, so on this bar right here, we got a lower low, lower close. Okay, now the lower low, lower close doesn't actually get confirmed until we come all the way down to this point here. Okay, price rallies up. Okay, and then breaks down again. Okay, so this confirms that you're in a downtrend, correct? Okay, and I'm going to label these. This is our starting point. This is where we started in that analysis. Okay. We got a lower low, lower close, but I'm going to call it initial structure low. Okay. And then down here we get another lower low, lower close. Okay. And I'm going to label this one new structure low. Okay. Now, we do have a move up in here, okay, and we're going to call this the outside return. Okay. Now, why did I do it backwards? Okay. Why did I put in my new structure low before my outside return? The reason I did this was because I wanted to show you that, you know, if we start here and price pushes down, puts in a lower low, lower close, or initial structure low, okay, and then we get the outside return area or pullback, whatever you want to call it, you know, we don't know where this point's going to terminate until we get the new structure low, okay, because we could have something, you know, in here where it goes, you know, we get like what they call a complex pullback, okay, and then it breaks down, okay. So even though we've got multiple waves in here, this whole area is still the outside return because we did not violate the highs of the starting point. We did not violate the lows of the initial structure low. Okay, I hope that makes sense. So, you know, once you understand how to read the price chart, you know, you can probably do it as you're going. But I wanted to show that to you just real quick while I was putting these in there. Okay. So as we put in the new structure low, we get a little bit of a rally out of there, and then we get another bounce lower. Okay. Again, we get a lower low, lower close. This close is lower than this one, lower low, right? So I'm just going to copy and paste this. Okay. Now what we get is we get a little bit of consolidation in here. Okay. We break higher. We break this high over here. We come back down. We try to retest, but we don't quite make it up to the top. Okay, and we're just kind of coiling in here. Okay, we'll put in a double bottom. We'll get a little bit of a push up, not much, but I mean, if you look left, there's a little bit of structure there on here on the daily. Remember, we're on the daily chart. One could, I mean, each one of these little bars, the green bars, are more than likely going to be a pullback or outside return on the lower time frames. Okay, once we get this pushed down right here and this bar closes right here, what do we get? We'll get another new structure low. Okay. So I'm going to drag this over here. Okay. So we're definitely putting in lower lows, right? And we're putting in lower highs. Okay. Now, this area right here, okay, that I've got highlighted right here, this is what I'm going to label my outside return. Okay. Oh, if I can spell it right. Don't hate if I can't spell. Okay. Okay. And I'm going to do / consolidate. Okay. Consolidation. Okay. Because I mean, it is our outside return because we put in a lower low, lower close. Okay. Now, if the market pushes up and then breaks down again, we get another new structure low, then what we could do is we could make this area right here our starting point, our initial structure low, outside return here, and then new structure low here. And then we can just forget about all this here. Okay. But that's probably irrelevant for now. But okay, so that kind of gives you an idea of the initial move on the daily. Okay, so the daily bias is short. Okay, and you can write that down if you want it so you can follow along. Okay, so what I want to do is on this last new structure low, okay, I want to draw in a horizontal line to mark that as structure. Okay, because that's where the market come down here, rallied up, and we kind of consolidated in between that level until this point here, and then we broke down and put in a lower close. Okay, now since then we've kind of traded sideways here, right? Okay, so now that I know that my daily bias is short, okay, I want to look left and see if I got any structure at this level. We're at 128.57. So I'm just going to scrunch up my charts as small as I can get them. Okay. And if you look, we've got a little bit of touching in here. We got a little bit of a pull retracement off of this. We've got some of it. I mean, it's not exact, but I mean, it's got a little bit of a bounce off of that. It's got a little bit here. I mean, it's not exactly, but look, we got wicks up in here. We've got this that pushed a little bit lower. We got some wicks in here. So I mean, we've got some wicks in that area. So to me, I mean, that looks like a pretty good spot. Okay. And that could be why we got more wicks. I mean, wicks on one side, wicks on the other. Right? Let's look at the wicks. Okay. Let me just fatten this back up. Okay, so that's how I break down the daily chart. Okay. So now our overall view of the market is bearish. Okay. So now we need to drop down a time frame. Okay, and I'm going to go down to the 4-hour chart and change this up a little bit. I always try to load up 5,000 days to make sure I get enough data. I just hope it don't take a while for my chart to load up. So I hope this is helping you kind of get an idea of how to get a bias on the market on the bigger picture. And I hope it does what I want it to for me, you know, to be more disciplined and be able to notice if I make mistakes or whatnot. Okay, so here on the 240, okay, what I want to do is I've got on the daily chart, we kind of drew out a box, highlighted it, of the overall area of consolidations. Okay, on the 240, I want to kind of shorten that down a little bit to look for a high probability entry to get short. Okay, now this here's the overall consolidation on the daily chart. Okay, so technically anywhere in this zone I can look for opportunities to get short. Okay, as long as it meets my rules. Okay, it's got to meet my rules. Okay, so the first thing I want to do is I want to note the most recent retracement area. And for me, what stands out to me is this little area right here. Okay, and I'm looking at all this back here too. Okay, because we got a little bit of, you know, just consolidation in there. Okay, now if you wanted to, you could come in and draw these lines out, you know, to kind of show the waves. However, I'm not going to do that. I mean, I've got my initial bias from the daily. Okay. Okay. So this is the area that I'm looking at initially. Okay. So now the question is how can I get involved? Can I make this area smaller? Can I pinpoint my entry? Okay. And one of the best ways to do that that I've learned for me is to use Fibonacci ratios. Okay, so I'm gonna go from the swing high all the way down to the swing low. Okay, and I'm gonna put some arrows in here so I can kind of, I'm coming from this peak here to this peak here. Okay, and I'm gonna scratch my chart up a little bit more and make sure I got it right. But yeah, I did. Okay, so that's the swing high. This is the swing low of this move. Okay. Okay. So right in that area, we got a 382 retracement. Okay, so I'm going to delete all these other fibs, so I don't need them. All I need is a 382. I'm going to fatten it up. Okay. Then I'm going to take one from this last move. See, here's the main move. Okay. Now I'm going to take one from this last leg, swing high to swing low. Now I'm just going to copy and paste this, drag it over to that swing high there. Okay. Now the swing low is going to stay the same because it is the lowest low. Okay. What do you know? We've got another fib in there, and it's going to be a 50%. Okay, so let's delete all the other fibs. So all we need is the 50. Okay, so in this almost identical spot, we've got a 50% tracement of this move here, okay, and then we've got a 382 movement of this leg here, or this move. Okay, let's delete those. Okay, so right in here, and look at that. Look at that. I didn't notice that a while ago. Look, a 132 even handle right there at the 382 and 50%. So I mean, already, I mean, I'm building a zone smaller than my initial zone to get involved in that. Okay, and it's within the little consolidation area that I was originally looking at. Okay, so what we can do now is, since we've got this smaller box drawn in, we've got some fib confluence. I'm going to delete this daily zone and get that out of there. Okay, so now my chart's looking a little cleaner. Okay, so now what are some other things that we could do to shore up a price point to get in enter long or short? I mean, we can use a fib extension from this bar right here. Let me fatten it up so you can see it. Okay, this bar right here, it's not this low on this candle right here is not as low as this one. I don't know if you can see that, but let me put the data box on here. So the low on this candle is 124.82, and the low on this one is 124.79. Okay, so it's not quite as low. I mean, it's hard to tell, but I mean, it's not. So what we can do is we can take an extension from this low back up to this high here before price fell down, and we can drag it back down. Okay, we get a 618 up in there. It's a little bit lower than our 382 and our 50% that we have on the retracements, but it's still in that box. So it's, you know, we can use it. Let me fatten it up. Make it fat like me. Okay. Another thing we can do is we can do another retracement from this swing high here, okay, and down to the swing low. Okay, and it looks like we get an 886 just below that. So let's fatten that up. Delete the other ones. Fatten it up. Okay. So as price comes up into this area right here, our first line in the sand per se is going to be the 618 retrace or extension from this leg. Okay. Also take note of the 131 even handle. Okay. The 161.8 or excuse me 161 extension comes in at 130.94, so 6 pips above. That's the even handle. So I mean that's a pretty good area right there too. However, I like this higher area because you got two fibs and an even handle up in there. Okay. I don't know if I don't think another fib retracement or extension will get up in there. Let's see if we Let's see if we can draw one from this leg right here. And we're going to come down to that leg. So we get if we come down here, we get a 382 right at the top of that. So then that's kind of cool. Let's see if we drag it down a little bit, all the way down to the lows. Okay, if we do that, then we get another 618 in there. Let's see if I can change this color to gold, fatten it up, delete the other ones. We don't need them. Okay, so we've drawn in several retracements. We've drawn one Fibonacci extension. There's really not going to be an ABCD pattern up in there. I mean, we're too far away because these moves have been real short. So what we can do now is we can take our initial zone and shorten it up. Okay. So what I'm going to do is, because we got these fib clusters here, and we got the 132 even handle, and we got structure right above that, I'm going to come in right at the 132. Come over here. I'm going to come in right at the 132 even handle. 131.99. We'll call it good. Okay. And then I'm going to come down, okay, to the 1618 Fibonacci extension that gives me right in between those two even handles. Okay. And I'm sure we've all heard it, you know, the even handles or the double zero numbers, you know, whether it be even handles like 133, 134, 135 even, or say it was 129.50, 125, or 155.50 or something. You know, those even numbers like that, I don't know why, but they act like magnets usually. So, I mean, there's no guarantee. Okay. So now that we've got some fib clusters in here, we've gotten our zone smaller. Okay, I'm going to delete the rest of these fibs because we know that they're in there. Clean my chart up. Okay. Now what we can do is we can do two different things. Okay. We can stop right here and wait to see if price. I don't know if I did that right. Okay, it's controlled F2. If price can rally up in there, okay, and then we can look to get short, or okay, because remember I got this line down here too, right? Which this here was the lowest low before we got the new structure low. So we're still looking for short entries. However, on the 4-hour time frame, this is my area that I want to get short. Okay, but let's drop down. And we're on the 240. Let's drop down to the 60 and see what's going on. There we go. Let me get me a green. I'm doing these videos. Man, it's talking a lot. Make my mouth dry. Okay. So I'm going to get rid of this now if we don't need it. Okay. So we know we're looking to get short. Okay. Here on pound yen. We are now on a 60-minute chart. Okay. We've got our zone drawn up here in between the 131 and the 132 even handles to get short in. Okay. We are currently below the lowest low before a new structure low occurred. Okay. So we could build another kill zone in this area. Okay. But if we do that and we get short and we get stopped out, we must ride it out again if the price gets up here. Okay. Now this area right in here. Okay. I'm going to color this red. Fatten it up. I don't remember. That's the outline. Okay, so that's going to be good. Okay, so this red box in here, this is what I'm going to consider the no trade zone. Okay. What this means is if price is in this area right here, okay, and if I get anything other than an advanced pattern, I will not place a trade. So no trend, no uh, uh, trend continuation trades, no counter trend trades, nothing I can do in this zone unless it's an advanced pattern. Okay, so this here is the no trade zone. Okay, so what I want to do now is I want to just focus on this lower price point in here. Okay, I'm going to draw another box, and we're going to go from the swing high up in here because this is, you know, price rallied down and came back up. Okay, we're going to count this area right here. Okay, and I'm just highlighting this to show you what I'm looking at as far as price and what area of the chart I'm going to focus on now. Okay, so now that you know, I'm going to delete that. Okay, so you know, on the higher time frames, I used lines to find out what the market was doing, right? Okay, we know that we're in a bearish trend. Okay, then I used the fib retracements and the fib extensions to pinpoint my entry area or my zone to look for trades. Okay, now I can do the same thing. Okay, on here on the 60-minute chart, looking for another entry reason to get short below this support level here, or resistance level now. Okay, first thing I notice is we've got, I think it's this one. Hold on. Let me see what the shortcuts were. I don't know what they were now. Alt F2 and Alt F3. Okay, so right here, oh my goodness, come on, Rick. Okay, so right in here, we got some tests of that level here. The price fell off. Okay, and then look at it. I can do control, copy and paste now. And then we came up. We tested again here. We tested again here. Okay, and as we get up into that area, I mean, we're still a little ways away, but we're within 30. Price got to, you know, within 30 or 40 pips of it. And look at that. We started putting in wicks here. Okay, so what we can say is, if price gets up into this area right in here, okay, and we've actually got like a little, somewhat of a double topper in here. It's not a valid double top for me because it doesn't meet my rules, but I mean, it is what it is, right? And then we've got this test back here. So you could say that, you know, some people, I don't know, I don't trade it, but you know, anytime you got a test structure, you retrace off it, you put in a double top, you get a retracement, you put in a double top. I believe that's what they call the kiss of death trade. And then what do you know? Price fell off. I don't trade that. I haven't tested it, so I just saw that and thought I'd point it out. That's crazy. Okay, so we've got 3 tests of that level. So I'm looking for this level here for a reason to get short. What do you know? Okay, we can take our fib retracements from this low here up to this high here and kind of look and see what we got. Okay, well, we got a 50% here. Okay, that's a down move, right? So a 50% retracement puts us on a bat pattern alert. Okay, so now I'm going to go from the swing high to the swing low. Okay, we get another 50% retracement in here. It actually hits a 618. Okay, and then we roll down and we do hit the 886. So we did have a bat pattern in here. Okay. Okay. Now, because I wasn't journaling like I was supposed to and taking notes like I was supposed to, I don't know 100% if I caught that trade or not. Okay. I would hope I did because I do my analysis daily, but I'm not 100% sure that I did. And I think that's part of my problem is missed opportunities. Okay, because I mean, if it was uh, if I didn't take the trade, right, it is a valid bat pattern. Okay, we got down to the lows. I mean, a little bit of pain in there, but I mean, it rallied up and eventually hit target 2 right in here. Okay, so I'm gonna assume I missed the trade. Okay, because I don't know if I did or not. I'm gonna assume I missed it. Okay, so for target 1 was 128 pips. Okay, target 2 eventually got hit over here for 246. Okay, so you got 246 and 128 pips. That's 374 pips I could have missed, or I probably did miss because I don't know. And that's, I mean, that's, oh my God, it's pissing me off. But I mean, that's part of the reason I want to do these videos and sharing with you guys to kind of show you my battle with myself as I try to transition and get to the consistently profitable stage in the game, so I can, with confidence, put money at risk. Okay, man, that just chats my ass. Okay, but anyways, nothing I can do about it. Right, it's over, said and done. If I missed it, I missed it. If I didn't, I don't know that I didn't, so it doesn't matter. Let me get a drink of water. Okay. So now that pattern's completed and hit target 2, okay, we can't use that, right, for an entry reason. Okay, because on advanced patterns, it doesn't matter if the market's bullish or bearish. If it's an advanced pattern, I take it. Okay, period, plain and simple. It's a strategy in its own. Okay, so what can we do next? Well, let's start redrawing. Okay, we know that we've got the test up here, so let's take a retracement from this wick up here in the highest high where it breached that level and come down to the lows. Okay, well, we got a 618 retracement, 618 retracement. Uh-oh, we got a little bit of a movement down here. Okay, can you see that? Let me move this so I can draw it in with you. Okay, so we're coming down like this, right? Price rallies back up. We kind of see we touched that 618 in here. We kind of done like a 2-step move. We pushed up. We didn't hit the 786, and then price come down and hit the 61 or the 382 on this down move. But watch, if I take a retracement from this swing low here back up, we should get a 618 retracement. Let me move these lines so I can see. Fatten it up. Man, my eyes are getting bad, I guess. Wife was right? Don't argue with the wife about your eyes getting bad. Okay, so let me drag this down a little bit. Now, normally I don't pay too much attention if I'm off a bit, but when it gets that close to the level, I got to make sure it's exact so I know it's a valid pattern. So give me 1 second while I measure it. Okay, so the high is 127.70. Why do I do that data? So I'm off by 1. Yeah, but if it's that close to being valid, I gotta measure it out, make sure it's valid. Okay, and then the low on this one is 125.92. 125.92. 125.92. Okay, so we're at 125.91. So we're off by a pip, which makes this potential pattern invalid. Okay, so I'm going to make sure that this low right here is right. 124.82. I'm off by 1. So let's fix this. So 124.82. Okay, now let's see. Now look at that. So now the low on this candle that hits the 618 is at 125.92. Our 618 retracement is 125.92. So this would have been a valid Gartley pattern. Okay. However, now we're this far in the game, we know that it's not valid. Okay, because what we have is, let me draw it in here so you can see it. Okay, so what we have is we have this move here from this swing high here. To this swing low here, or swing high here. I mean, I said it wasn't invalid. I mean it is valid. F6, okay, to this low here. Okay, and then it should complete somewhere in this area here. Okay, and let's get our extension from our A to B leg and back down here. Put my fizz back on, make sure I got it right. It was close. I don't know why I deleted them, but okay, so yeah, this is the highest high before it rolled over and hit the 618. Okay, I just want to make sure I had my B leg right. Okay, so see, we do have, oh, I deleted the wrong one. We do have a deep Gartley here on the 60-minute pound yen. Okay, and it looks to complete at 128.47. Okay, and what do you know? We're right at structure. We got a little bit of structure, a little bit higher up, but it's going to be like 100 pips or higher. So I'm just going to do from my line that I drew in, my support line, back up. Yeah, it's sort of like 100 pips, 105 pips up. So should be okay, not to worry about that level there. Okay. So now, let me delete this box. I don't need that now. Okay. So now we have a valid bear Gartley completing at or near structure, right? Okay, it's going to complete at 128.47. Okay, right above that's 128.50s. What did I say about the even handles, or the 5.0s or 2.5 handles? Okay, we should get some kind of resistance off of that level. Okay, plus we got our line in for support, where becomes resistance. We've got some tests in there. We've got some long wicks in there. We're already, our overall bias of the market is short. So this should be a pretty good opportunity to get short this market here on the pound yen. Draw that, delete that draw, clean that up a little bit. We can get this out of there. We don't need that. Okay. So now for me, because I've traded the pound yen on the hourly chart, 128.48. Right there. Okay. Yeah, I need to move this a little bit so I can see that wick. Okay, make sure I got this. I'm off by one here, so I know that was 82. So let me fix that. Make sure my data is right. Let's see, 82. Okay. Now stops. Going from this low here, this high, back down here. Okay, puts my stop at 129.10. I'm above the 129 even handle. Let me draw the line in here real quick. It's easier to see sometimes. Okay, so I'm above the 129 handle. I'm above these little wicks here. Okay, but now it puts me close to these highs here. Okay, but I do have a 127 extension up there. Okay, got a 1681 up, or extension up in there. I just want to make sure that my stop loss is in a pretty good spot. I feel it is, because I mean it's above the 129 even handle. They're above the initial structure levels to the left. You know, the first set. We're in a bearish market. We're in a bearish. It's going to be a bearish Hartley pattern if it completes. So what I'll do now is I'll make the call and say, okay, Rick, your stops go at 129.10. Let's see. Okay, so that's my stop. My targets will go out to 382 and a 618. Let's make these green for money. Money, 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 money. Let's see. Yeah. I like the forest green for some reason. Let's go with this one. Okay. So that's how I break down the price chart. That's how I'm supposed to break it down every day. Now, once we get, or I should say, if price gets through this no trade zone up into my reversal zone, I'll put that in there. Reversal zone. Okay. If price can get up to my reversal zone, then I will look for a different opportunity to get short. You know, whether it's another advanced pattern, if it's structured trade. If it is a structured trade, then I will use the CTS system, the combined technical scoring system, to look for my entry regions there. But I hope this helps you kind of see what I'm looking at and how I break it down. And I know it's going to help me in the long run, because it's just a way for me to journal my trading ideas, track how I'm track and review how I'm breaking down the market, so I can see any flaws or whatnot. You know, did I miss anything? Can I improve on something? You know, it's just, I think it's a great tool for me to use to become a better trader and transition from demo trading to full time. Okay, so one last thing before I cut this video off is anytime I find a trading opportunity, oh, see, I almost missed this part. Before I actually place my trades, I have to measure out my risk. Okay, I'm not too much worried about my reward, but I need to know what my actual risk is going to be. Okay, so the pattern is going to complete at 128.40. We got 128.48. I need to front run by 5. That puts me at 128.43. Okay, and then I want to measure to 129.10. Okay, I got 67 pips of risk. Okay, my max is 100, so I'm good. Okay, I'm above the previous structure. I'm in an advanced pattern. I'm in a bearish market. The stars are lining up, per se. You know what I mean? Okay, so now that that's in there, then we can measure out our reward. Okay, 128.43. Okay, target 1 is going to be 127.08. So that's 135. So just target 1 is better than a 1-to-1. It's actually better than a 2-to-1. And 67 times 2, it's 134. So yeah, it's right at a 2-to-1 to target 1. And then target 2, 128.43, 26.22. is 221. Okay, for a total of 356 pips on the trade if price can rally up and fall over. So, thank you for watching. I hope it helps you. Um, I I strongly feel it's going to really help me in the long run to analyze how I'm doing. Um, if you have any questions, please feel free to reach out to me on Twitter, Rosella99, or leave a comment below. And I look forward to doing the next one. Thanks for watching.